Welcome to the Treasury Update podcast presented by Strategic Treasurer, your source for interesting Treasury news, analysis, and insights in your car, at the gym, or wherever you decide to tune in. On this episode of the Becoming a Treasurer series, Craig Jeffery is interviewed on a chapter in his book, The Strategic Treasurer, a Partnership for Corporate Growth. The chapter is called Process versus Silo View, which covers vital Treasury concepts around process efficiency, risk management, and careful business advice. Listen in to learn successful Treasury principles to help equip you on your journey. Welcome to the podcast, Craig.
Thanks, Meredith. Good to be here.
So one of the chapters in your book, in the Strategic Treasurer, a Partnership for Corporate Growth, is called Process versus Silo View. You devoted a chapter to this one topic, so it must be important. To start us off, could you explain what this chapter title means in general terms, especially the silo part?
The title of the chapter, The Process versus the Silo View, is meant to help people think about an end-to-end or a comprehensive view of what occurs in business processes, as opposed to looking at something just from my area or even within your company, but to look at the entire process. And there's usually third parties that are involved in that, whether it's receivables or payables or the bank partners. When you look more broadly, you do a better job. I think you've probably heard me quote a number of people are attributed to this quote as optimizing part of the process sub-optimizes the whole. And this is certainly true with a number of activities. So the broader view versus the narrower view. The broader view is harder than the narrower view, or the process view is harder to achieve than a silo view or a limited perspective. And this type of broad view, or an end-to-end view, is effective for both process efficiency, risk management purposes, as well as for giving careful business advice. So it's the broader view, and that's why I devoted a chapter to that term, or to that topic. And silo, it depends on where you are in the country. You hear people talk about silos, like grain silos that are straight up and down. Other areas of the country talk about stovepipes. But just think of it as a subset of what goes on.
Interesting. What drives one to have the silo view? Since it sounds obviously less preferred, why would anyone take that view?
I don't think anyone says I'm going to take a really truncated view. But I mean, when you think about how you learn things in the business world, or you learn in life, you don't think globally, instantaneously. How does one thing affect something way downstream, or understand, the what and the why of something that comes to you? So it is the easiest position to take, because you see what's in front of you. You start off a job, you're given tasks or functions that tend to be very narrowly defined. And that's how we understand things. And, and the goals you're given as an organization, your key performance indicators are oftentimes very focused on something that's parochial or within your stovepipe or silo. And that must be the most important, because that's what you're measured on. So you're going to focus on your particular part of the flow. I think there's an aspect too, I don't want to get too much into this, but there's an aspect of what we've talked about in different ways before about linear and global thinking. And that's an aspect where those things can converge. When you think about one thing occurs and it flows to the next and it flows to the next, and you think about them in sequence. And global learners, tend to think of, I need to understand the big picture, how these things fit together. And understanding the process and how it fits into the big picture requires some understanding of both of those elements. So I guess to answer your core question is that it's less preferred because a more mature view is helpful for risk management, for understanding overall process efficiency, capital efficiency. And it's easy to take because that's how we begin by learning. We learn part of it, and then we have to expand up and downstream and taking a macro view.
It is vital for efficient processes. Please explain how.
For efficient processes, I think we can think of different areas. You think of, you've got a handoff upstream and downstream. You don't want to get in trouble, so you put on these controls to manage all the handoffs you have in an organization. We received this request at this time, and you turn it over to someone else, and you got in trouble for something else. So you put in some type of control or function to make sure you don't get in trouble again. And the idea is how do I make sure we eliminate the opportunities for errors up and downstream? You may not want, if you're fishing or drinking out of a river, you want to make sure that people upstream aren't dumping pollution in it. So you have to know what comes before and what comes after and what's the purpose. It's vital because you can do a function where you think you're doing a great job and it impacts someone else. And I'll give you an example I think you asked for an example in efficient processes, but I'll make it about efficient working capital management. So think about, someone has KPIs, key performance indicators on working capital management. Procurement might be focused on low price. Their measure is a financial measure related to the cost. And so what matters to them is getting a low cost and, the terms of payment and how much inventory is stored may not be a metric they have. And so if they're focused on one metric there, that could compete with what treasury may be looking at. So I think I know I've shared this example with a lot of people. It was, during a change in efficiency of air conditioning units, they went from, 12 SEER to 14 SEER was the new standard. And someone in the procurement area was like, we get a great deal on these outdated ones, and we can sell them to we can go ahead and sell them to builders because we'll get a really, really good price on them. So they bought, 5 or 6 months worth of air conditioning units. While at the same time, the housing market froze up and there was barely any building. So now they had several years worth of air conditioning units, and this $30 million purchase now absorbed all the cash because they had to pay for it. And Treasury's like, we've been working this program for a long time to optimize our inventory, and all of a sudden we've got this $30 million we had to pay for air conditioning units. And that was exactly opposite of what Treasury needed to do from a working capital perspective. Their KPI was blown to bits, and the procurement people thought they were doing a great job on the pricing front. Both ended up being harmed by that, but that's an example of not thinking through the entire process and maybe having KPIs that compete. So, setting goals, aligning goals across the process is really powerful in an organization. And what may be optimal within one area may not make the overall process optimized. So that's back to the quote about optimizing part of the process, sub-optimizes the whole. So taking that broader view is vital for capital, efficiency, scalability, risk management.
That's a great explanation. Do you have an example ready for risk management?
Yeah, I knew you were going to ask me that, and I don't know that I prepped on one, but the idea of risk management is understanding the impact of one thing on another. And I think when you look at, we recently had a podcast. I talked with Tony Crabell from Greif, and we talked about the process of understanding risk and exposures across the organization, and direct exposures that are obvious, that show up. I'm making a big purchase. It's in this currency. I have this currency pair exposure is easier. Sometimes it gets harder when things are indirect. They're indirect because they might be a step or two removed with what a business is doing or the change in mix. Or it might be that it's indirect in that you can't see it. It might not all show up through the financial statements in a timely manner when you're trying to hedge. So the concept of how do I know and understand my exposures is you need to think about the entire process, not just the transaction at the end. Because the sooner you know what's going on, the sooner you realize, we were hedging 75%. Well, our sales in that area dropped 50%. Now we're overhedged and we've taken a speculative position. And maybe we should have done a better job with forecasting by looking at how is our business flowing. So there's all kinds of implications of understanding the flow for understanding our exposures, changing exposures, how we hedge them. So risk management is just another good area to take this broader process view.
If this is vital for leaders and for those seeking to become a treasurer or a better treasurer, what advice do you give someone to adopt this leadership perspective?
Yeah, it's a leadership perspective or a mature view on processes and the organization. So, this idea of a broader view of a process says, I need to look up and downstream. What you're doing may be good for yourself, but it may impair someone later on in the process. And same thing, you need to know who's giving you activity or work or making requests, and understanding at the source what's happening and what are their motivators and drivers and how can you best serve those. So, everyone has direct control over their particular part of the process, and you want to optimize that within the context of the broader process. Usually many organizations don't have a process owner, a true process owner that can drive all the behavior. Some do. Some organizations do. Some product management roles have the type of function and responsibility. But I guess as you go about that, when you're making the optimization activities, you're looking at the flow up and downstream. You're seeing the handoffs. You're thinking widely, and you're validating some of the assumptions you're making with others. And you'll be surprised when you have those conversations how much you'll learn. Like, that will have a big impact on us. You can think of, we're going to put this new card program in and it's great. And someone's like, well, what about accounting? Well, those transactions won't hit until 2 months, and we can meet with them after we've inserted this new banking service or card platform. And that's usually a sign that there's going to be significant accounting problems later, because you didn't think about the downstream impact of how can we account for things, control things, reconcile things efficiently. So that's, make sure you're thinking widely, understand the assumptions and implications, and vetting that with those that are up and downstream. And then, finally, in terms of thinking about that, it's, when there's a handoff, you're going to have to do this extra function, so I don't have to do it. That becomes a win-lose type view. And sometimes it is. Sometimes you have to decide where a function or activity occurs. And, it's just where does it best fit? And you can view that as a win-lose, or, just properly allocating it. Meredith, that doesn't always have to be the case. And I know win-win is a big, term that's been around for decades. How can both parties that are part of a process win? And sometimes that requires different thinking. If I'm like, I want to pay more readily with electronic items. Let's say I'm going to pay with ACH, and I just turn it on. It's great. I don't have to pay for. I have the least expensive payment route, and the information's gone. I've made my payments. I've gotten really efficient, and then your vendor's calling because they don't know what you paid for. Maybe you didn't send information, or they couldn't see the information that said you're paying for these 55 invoices. And so now you've broken a process. You've created an exception process because the information flow has a defect. It's not going to the right area. And then they have to overcome that with an exception process. And that's one view. And the other, another view, just to bring that point home, or bring that same type of point home in a different setting, is when you think about maybe I need to free up working capital from my supply chain. And maybe I'll say, I want to expand my payment from 45 days to 60 days, and I want to force it down on all my suppliers. Well, there's a number of issues with that, several of which are maybe they can't afford it. It'll break them. You'll get higher prices. You'll have to pay higher prices over time because you did something like that. That's one aspect of it. But the other is, if you just look at, I need 60 days on my payments, and maybe it'd be good if my vendors could collect funds when they wanted them. They could pull it in sooner. There's a number of ways of doing that. You could say perhaps you offer discounts so they could receive money sooner. Might have been a historical way, but there's certainly a lot of we'll just call the broader category of supply chain financing, where a third party, perhaps a bank with substantial capital and maybe a tech firm, can get in the middle and allow for earlier payment on the part of the vendor, giving them more financial flexibility, still allowing you to extend your average DPO terms out farther. And then there's a number of factors there. The available credit rates that would be affordable can play. So when you think about the process, don't just think end to end, but other ways of altering it, which may include other parties to remove slack in the process or insert capital where it normally wasn't.
That's really good advice. I know you're excited about some recent findings that show the process view is gaining some traction. Can you give us the rundown?
Yeah. So when we talk about the process view, I for some reason I've started talking about end to end, which is thinking about the process within your organization, or if you look at it from your organization through to other organizations or trading partners. So we might refer to that as end-to-end, your part, to end-to-end, their part, end-to-end. So saying end-to-end to end-to-end is perhaps a little bit rough on the alliteration, but it is a way of thinking what's the start and end of a process and how can I look at it. But some of the findings, this end-to-end to end-to-end view or end-to-end squared view, whatever you want to call it. AP and AR, in one of our recent surveys, we found that just over a quarter of organizations took the view that the process included their trading partner, so those areas outside the organization. So we've reached the part that about 1 in 4 companies, 1 in 4 finance professionals are looking at this broader process. I think that's really good progress. There's a long way to go. 1 down, 3 to go in terms of percentage wise to see this adopted. But that's really good progress from where everyone used to be focused on in terms of their own silo. Or maybe the broadest they would look at is within their own company. I think this is good because it will have a positive impact on relationships, efficiency of processes as part of that, control, how we leverage capital, risk management. There's lots of areas for benefit.
Excellent. Any final thoughts?
I just encourage people to think. Linear thinking and global thinking both have a good place. And when you start to say, how can I understand what I do can impact others downstream? And if I'm going to optimize what I'm doing, I have to understand what's upstream. And, there's going to be trade-offs in terms of optimizing things when we take a process view versus a win-lose view of, the silo or stovepipe mindset.
Very good. Thanks for sharing these insightful treasury and business concepts. Is there a way that our listeners can get a copy of your book, Craig?
Sure. They can go wherever good books are sold. Any of the online portals are there. You can just search for the Strategic Treasurer Partnership for Corporate Growth. I know it mostly sells electronically and digitally.
Excellent. We'll do that. Thanks again.
You've reached the end of another episode of the Treasury Update podcast. Be sure to follow Strategic Treasurer on LinkedIn Just search for Strategic Treasurer. This podcast is provided for informational purposes only, and statements made by Strategic Treasurer LLC on this podcast are not intended as legal, business, consulting, or tax advice. For more information, visit and bookmark strategictreasurer.com.